Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at Nickel & Associates Asset Management. Apple's announcement of a $110 billion share buyback was the biggest news of the week as far as I'm concerned, because if the company follows through and executes as promised, this has the greatest ability to affect the valuation of the stock in the years to come, as I will demonstrate today. I do wish to add that, as longtime subscribers of FANG Friday will recall, I clearly laid out this precise path 3 years ago when the shares were originally heading for their $3 trillion market capitalization mark. At the time, I did a special analysis of Apple for our subscribers, and I set out the path that the company would need to follow to reach a $4 trillion market cap. Well, it's taken a long time, but that finally appears to be the path that the company has decided to take as well. In terms of immediate market impact, the other big news concerned Elon Musk's visit to China. Shares of Tesla recovered over their bubble price, 7.4 times book, and in 4 days jumped all the way to their HB1, that's 9.5 times book. That's after Musk made an unannounced trip to China on Sunday, leaving that company with 2 wins related to driver-assisted software. The car maker will partner with Chinese tech giant Baidu for mapping and navigation functions to support what it calls full self-driving, that's FSD. Tesla also passed a key data security and privacy requirement in China, helping to ease some of the concerns over bringing full self-driving to that country. Now, the main issue that I have with that announcement is, unlike the Apple announcement, where we should be able to see and track the progress of the impact of share buybacks on the stock almost immediately, we won't have a clue as to exactly when there will be any impact on Tesla's bottom line, and more to the point, what the size of that potential impact will be, if any. Anyway, let's take a close look at all the FANGs and what went on in the past week. As always, before I do, I'd like to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. And if you would like to learn more about our valuation service, go to www.strategicanalysis.ca. Okay, let's start off with Amazon, and I think I'd probably just have to describe it as being business as usual. It's just continuing to flow right along between the bubble and the HB1 price nicely, hopefully heading for the HB1. Alphabet had a lovely announcement, didn't they? And big share buyback, increase in dividend, and the stock had a huge jump. In fact, as you can see, it almost got to my target, its bubble price. Set back a little bit, but let's be patient. Microsoft, again, business as usual, not much to say right there. Netflix, Netflix, as you know, hit its HB2 on outstandingly good results. And I would have thought, as happened in the previous quarter and the previous quarter before that one, they had also had good, terrific numbers actually, that we'd have got another jump and we might have crossed over the HB2. Well, we got a gap all right, but the wrong way. Now we'll have to wait and see what happens. Meta also reported very good numbers, but it too plunged. and got down to its bubble price, actually below that, and is just sitting there below. Now, you'll recall last week that before we put in the new balance sheet, which you can see by that little red triangle there, that actually the stock seemed to be quite a bit lower beneath the bubble price. However, with the new balance sheet, we see that it's just below. I think I would have to say this better recover and recover very soon. Otherwise, we'll have to put out a sell on the stock. Here is the longer-term view of Meta, and of course you will recall that every time that stock reached its bubble price, it set back, except for this last time. Well, have things really changed? We don't know. Zuckerberg is up to some new enterprises, and we're going to have to see how that works out. Nvidia has quite a decent week this year, and it continues to move along its HB6, which is 33 times book value. As long as it holds there, I am comfortable. I'm a little bit concerned here that you can see that the earnings and the fair market value are sort of flattening out. The stock is very, very expensive and a long way above its fair market value. Contains a lot of risk if there's any disappointment here. Tesla, well, as I mentioned, had a beautiful bounce on the Elon Musk's announcement. In fact, it went directly in 4 days, leapt right to its HB1 and just ricocheted off there like a bullet off a rock. And now I think that the market is probably going to stand back and say, okay, that's good, but what are you going to do for us now in terms of sales and earnings? Now we get to the stock that I have been waiting to discuss, and that is Apple. And here is where Apple is today. Mind you, it's had a nice move up here today. But what does that announcement mean in the long run? Well, in order to answer that question, I'm going to look at the long run view of Apple. Now, the first thing that you see here is that balance sheet moving up very quickly and then kind of flattening out. And you can see that the stock never did manage to get above its fair market value in all that time until the balance sheet began to slide down. In other words, when the company began to buy back its shares. And when they did, the stock broke out and has had a very, very nice run ever since. Why? Well, to answer that question, let's go and take a look at what happened to the ROE of this company, the return on equity, thanks to the repurchase of all those shares. And you can see here, here's the ROE, pretty much containing the stock valuation, and now it breaks out, and with it, so does the valuation of Apple, and it had a lovely run up until the time that the company actually decided to, for whatever reason, to stop buying back shares, and suddenly the ROE began to fall, and with it, so did the valuation and the price of the shares. So, what do we learn from this? We learn that buying back shares can have quite an impact on the valuation of your company. And given the size of that share repurchase, let's go and take a look at another company that indulged in a huge share buyback, Home Depot, and see what happened here. Well, again, you see, it started out pretty innocently, but then look at the long, 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 long slide of the book value, which means a lot of share buybacks of the company. And what impact did that have? Well, look what happened to the ROE. It just soared. And with it, so did the valuation in price to book terms. And this is what Apple is playing for. And if they follow through, then there is going to be a lovely future for Apple shareholders. As they say, don't turn off your set. Things could get interesting. So anyway, to briefly recap, once again, some of you will remember when Apple was reaching that $3 trillion market cap that I laid out the roadmap for Apple to reach the $4 trillion mark. And I said at the time that the company needed to keep a steady and strong share buyback program to get there. Well, the company abandoned that particular ship. And no surprise, the shares headed down as the ROE slipped steadily short, as I showed. Now that they're back at the old hot dog stand again, things could get interesting once again. I hope that I am not being premature when I say that I will raise Apple immediately to a long-term buy in what I call my Phantom FANG portfolio. Tesla, I don't trust for a minute. It had a nice pop, but as the old saying goes, where's the beef? TBA, I would guess. No change with Amazon, Alphabet, Microsoft, and Netflix. Meta, with its new balance sheet, does not look as bad as we saw at first glance. However, it has broken below its bubble price, 7.4 times book. Not quite enough to satisfy my revised, or a revised, 3% 5-day rule of thumb, perhaps, but it doesn't look good either. Finally, NVIDIA did fall one breakpoint, no question, but the balance sheet growth does offset some of that pain. However, and keep this in mind, that HB6 support, 33 times book, had better hold, or I would move the stock to a sell, and I would recommend you do the same. Anyway, that's all for the week. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.